Next stock up here is Corsair Gaming, CRSR. Corsair Gaming, about $46,000 in this one. It's about a 2.67% position for me. Corsair, if anything, I've been a little bit of a net seller of this stock over the past few months. With that being said, I'm not planning on selling any more Corsair in the short term. And here's the deal with Corsair, okay? It's trading about 25 times this year's numbers, which is a little rich for a company like them that's more of a hardware electronic company, right? But based upon next year's numbers, we're talking about this is probably trading at, depends upon where you got your EPS numbers, I'm thinking between about a 15, 18, which is pretty fair for a company in the hardware space like a Corsair Gaming. So overall, I look at Corsair Gaming and I see a company that I don't really want to sell any more shares of, but at the same time, the stock's not really trading at a range that I necessarily want to buy more right now, right? So for me, it's actually kind of just a hold right now. Now, with that being said, if the stock went down a bunch, I'd be buying more shares. If the stock went up a ton, like let's say it's also trading at $25, $27, I might be a net seller of Corsair overall in regards to this one. It just hasn't had as much of a growth profile as we might have hoped, right? Next stock up here is RVLV, which is an e-commerce company, really in the clothing space. And basically, the stock is at nothing for us right now. We can just call it basically break even, right? In regards to RVLV, it makes up about 2% of the portfolio overall. I have about 3,000 shares here. I like RVLV. Will I be buying the stock? Yes, likely I will be. It trades about 27 times this year's numbers. Next year should be a much better year for the company overall. And especially when it comes to profitability, I don't know if it's going to be the most exciting revenue year for the company next year, but definitely expecting nice profitable growth in terms of the bottom line next year with some adjustments they're going to make, because obviously the revenues have come in lighter than they expected. And there's kind of like a divergence between when you have revenues that aren't quite expecting, what you're expecting as far as management goes. Usually it's going to hit your profitability much more. Then you're going to play more conservative. Maybe you do some job cuts, some hour cuts, things like that. Next thing you know, you're finding some cost synergies and your profit growth can be in a nice place, even if your revenue growth isn't at that particular time. Big short interest on this one, which I just think is interesting overall in regards to RVLV. So I love the management team here. Love the business model. I will likely be buying this stock, especially if it goes any lower, okay? That's RVLV. Next one up here is actually a hedge play, okay? And that is Polaris. I've got some put options on Polaris that are going to expire at basically the end of 2024. They expire December 20th, 2024. This is a hedge. So a hedge meaning essentially protection from our portfolio. So the way I always, think about this is what happens if the stock market goes down? What happens if we have a crash? What happens if we have a major recession, right? I need to have protection in case any of those downside scenarios happen. And a little hedging can go a long way if done properly in the market, in case you do have some sort of tanking stock situation, right? Polaris is a company that I think is a perfect hedge. This is a company that's already starting to be hit by interest rates, right? Obviously, when it comes to loans, it's gotten much more expensive. And a lot of people buy these off-road vehicles and the snowmobiles and all the different stuff they sell on loans, right? You're not going to usually pay $15,000, $20,000, $30,000 cash for these. A lot of people buy them on loans. So they're already kind of being negatively affected by what the Federal Reserve has done, obviously. But the other way I kind of think about this is if we have any sort of major recession where unemployment goes up in a major way and the masses get very concerned about their financial matters, they're not going to be selling units, man. They're not going to be selling units. The only reason this company's put up such amazing numbers over the past few years is because we had all the stimulus money. People felt pretty good about their financial futures for a while there. But a lot of that's changed, obviously, very recently, right? And we're at a situation where, employment doesn't get better than this. We're at 3% something, unemployment rate. It doesn't get better. So at the end of the day, when it comes to employment picture, it only stays the same or it gets worse. That's all that happens. And so if we also go to 4%, 5%, 6%, 7% unemployment, Polaris' business model is going to get hit in a major way. What the heck was that flew on me? It's going to get hit in a major way. I don't know what kind of bug that was, man. What are you trying to do get in my mouth, man? But anyways, Polaris. That's one of my hedge plays overall, okay? Alrighty, next one up here is cake. I love cake. I love cake. And I'm talking about real cake and I'm talking about cheesecake, okay? Cheesecake Factory. So this one overall, somewhat newer position to the public count. It makes up a little less than 2% of the portfolio in total. In terms of Cake, am I buying the stock, selling the stock? The answer is absolutely I'm buying the stock, okay? We're talking about a company that's trading at about 11 times this year's numbers, about 9 times next year's expected numbers. Dividend yield of 3.5% on this one. Between the Cheesecake brand, North Italia, what they're doing with Flower Child, and the rest of the FRC concepts, there's no doubt in my mind that Cake's just a great long-term buy. It's a stock I plan on adding a lot of shares to over the next 6-12 months. Regardless if there was a recession, no recession, anything like that, it doesn't matter to me. I'll be a buyer of Cake overall for the next 6-12 months. Absolutely love that one. Well, folks, this kind of sucks. So let's just put it that way. Want to run you through and take you through some important things I'm looking at here. Now, I don't see a way this ends good. So I think it's important I show you guys this. Now, I don't know how many folks watching this it affects. I think it affects a lot of other people a lot more. Let's just put it that way. So yeah, got a lot to go through in today's video. I just want to get straight in this, guys. I appreciate you joining me, taking the time out of your day to watch this one. And thank you for being subscribed, okay? So first place I want to start out here is Google Trends. This goes all the way back since the beginning of Google Trends and tracking Google search data around a specific search term, how to buy stocks, okay? Now, this specific search term went the highest we've ever seen in the second half of 2020 into the beginning of 2021. And it went there because everybody was kind of forced to be home. People had a lot of extra money around. There was stimulus. There was all that stuff going on, right? And so a lot of people wanted to try out the stock market at the end of 2020 and certainly the beginning of 2021. So a lot of people were getting involved in all those sorts of things, right? Now, we know that, right? And we've never seen that level of people wanting to get in the stock market really ever in history. It was crazier than the tech bubble, actually, much crazier than the tech bubble in terms of how many people wanted to get in regards to the market, right? From basically the second half of 2020 through the beginning of 2021. Now, what happened after that was no one wants to get in the stock market event, essentially, okay? All the way back in December, even with every growth stock in the world given to you for, pennies on the dollar, all of a sudden no one wants to even bother about like how to research stocks, how to buy stocks, how to get in the market, anything like that, right? And the reason this happened, in my opinion, actually is not as much around, it is part to do with people being scared, concerned, maybe people that had been in the market got, thrown out of the market, those sorts of things, right? But it actually has much more to do with the next chart I'm about to show you. And this is what matters more than anything, okay? And this explains why we had 2020 and why we had 2021 and why we're at where we're at in 2023. The chart I'm showing you right now. This is what we call real wages, okay? And if you really want to know how the average person's doing out there, always look to real wages. Real wages will tell you more than any other indicator, in my personal opinion, you could possibly look at from the macroeconomic landscape. Now, we had an interesting phenomenon that happened for about a 5+ year time frame, okay? From basically 2015 through about, until Rona, essentially, we had real wages absolutely skyrocket in the United States of America that we hadn't seen in a long, long time, right? Coming out of the Great Recession, we certainly had real wages start to catch up a little bit, but it was slow because companies weren't needing to pay workers much at that particular time, right? By the time you get to 2015, unemployment rate was starting to get pretty dang low, and finally companies had to start paying up. Now, we also had simultaneously inflation, which inflation plays a huge part in real wages, right? If workers in general are getting a 5% wage bump, but inflation is 10%, real wages are going down, okay? And so that's why real wages matter so significantly. Now, the problem is, in 2020, 2021, people had been through real wages bump in a huge, massive way, right? Real estate prices had obviously skyrocketed, and there was a lot of excess money around, right? And so a lot of people, when they have excess money around, they're like, what do I do with all this extra money? Oh, let me invest it. Oh, how do I buy Bitcoin? How do I buy stocks? Like, how do I do these sorts of things, right? If you have no extra money, you don't care about the stock market. You don't care about Bitcoin. You don't care about buying real estate. You don't care about any of that because you got barely enough money to get your groceries or whatever, right? So we had real wages go down and down and down and down for a long time. Now, very recently, real wages have started to tick up a little bit, but keep in mind, it's a little bit, not a lot. I mean, like so minimal that you can barely even feel the effects of that, okay? So the bottom line is, when you see this term go down, you've got to understand it's really gone down not just because of people being fearful or anything like that. It's gone down because the average person's been hurt so bad financially really the past few years, despite the employment picture being about as good as you can get with unemployment in the threes. Everything's gone up so much. Their wages just haven't been able to keep up with that, right? I take you back to when I used to work at Quick Trip, right? When I used to work at Quick Trip, I was making, $50K a year, whatever. And I've always kept my expenses lower than my income. So I was always in a position to buy stocks every single month, if not every single 2 weeks. Always. Even back when I worked at Walgreens and working minimum wage jobs, always had more income than expenses, right? So I was always in a position to buy stocks. And the problem is, in 2020, we had so many people that had benefited from real wages going up in such a significant manner for years, and then you add on crazy amounts of stimulus and crazy amounts of time on their hands, and everybody and their grandma wanted to get in the market, right? Now, this matters significantly, what I'm showing you now, because now I'm taking you back in history, and this will explain the story a little deeper, okay? This is that same exact term, how to buy stocks, right? And this term peaked around kind of like 07 time. Now, keep in mind, real wages had helped people out for many, many years, kind of, from basically 2003 to onward, right? And so that term peaks around there. And then for years, basically that term goes down until it finally bottoms out at the beginning of 2012, right? Why did that keep going down? Well, were people in a great financial position during those years? No. Everybody was fearful. You had the great financial crisis happen. People were worried about their jobs, their incomes, their homes, if they were able to keep their homes. We had foreclosures and short sales skyrocket to the biggest numbers we've ever seen in history. So the last thing that was really on a lot of folks' minds were how to buy stocks. How am I going to invest in the stock market? How am I going to do this, right? It's just, when you're going through that sort of financial damage, you're not going to think about that. Now, when did it finally start to come back? Well, finally, in 2014, we finally eclipsed where we were at basically back in kind of the 07 time frame in terms of how to buy stocks, right? So it took years to kind of get back to that place. Now, the problem with this is, and such a significant problem, is people missed out on all the dang money. They missed out on so much money, right? I mean, this was kind of during that time period of, very few people wanting to even find out about the stock market, how I buy stocks, stock market for beginners, any of that stuff. And look what happened with stocks during that time period. Amazon went up 700%. Apple stock went up 470%. Google McDougal stock went up nearly 400%. The NASDAQ in general went up 152%. And just people, unfortunately, missed it, right? They completely missed it. And this almost shows you kind of like last year when you had growth stock platter out there of everything you could ever want for any price, and people missed it, unfortunately. And they're going to miss it again. And so if we look at like last year, right, I was able to take advantage of those deals. It goes back to more income than expenses. The same thing I've been doing since 08, 09, right? And so I was able to pick up Tesla shares at $106, at $124. I mean, that's insane, right? Able to pick up these Meta shares at all these disgusting prices. Like, give me a break. So look at this. Somebody sold me 62 Meta shares at $88.94. Like, come on, man. Somebody sold me 650 shares in Meta stock at $93.12. Those shares today are sitting on a $133,000 gain. $133,000. That wasn't even a year ago. Just those lots there. That's insane, right? If I think about Palantir, I mean, my gosh, did they trade that one down last year, right? And some people were able to take advantage of it, the folks that had more income than expenses and all those sorts of things, but some people just weren't, right? Elf on a shelf. This was an extraordinary opportunity back in 2019. Holy smokes. But that was coming off of the very rough market we had in 2018, right? And so when it comes to these sorts of situations, I can take advantage of these deals because I know what I'm doing. On top of that, I'm not scared. On top of that, I have more income than expenses. And it's been like that for 15 years now. 15 years. The problem is most people can't do that, right? They are either scared or they don't know what they're doing in the market. They have no clue what they're looking at. I mean, they just, most people don't even know like what an income statement is. Like, come on, man. By the way, everybody should know an income statement regardless if you're in the stock market or not. Like, balance sheet, like that's your own life. Like, come on, man. More income than expenses. Put in the work. Don't be scared. Know what you're doing, right?